Welcome to the Tippy Top Entrepreneur Experience. A big welcome to AMG from Practical CFO.
Hello there. How you doing, Alex?
AMG. Now, AMG and I first met before lockdown in Jan 2020 briefly. And since then, our virtual relationship has gone from strength to strength through thick and thin and about every startup experience you can possibly imagine. Now, AMG is a breath of fresh air in the startup community. She brings a wealth of finance experience from the corporate world, which she skillfully applies to the benefit of startups and entrepreneurs. This includes everything from fundraising to exits. AMG, please do tell us a bit more.
Okay, so where to start? I'd probably start with the story of how I got into accountancy. I was on my degree and I did not understand a word that the accountancy lecturer said to us, not a thing. Thought this is really important, need to understand it. We had 2 work placements. So the first work placement was with a small accounting firm, actually in the accounts of a small firm. They did art supplies and it was fabulous. From the minute I sat down in the seat, I just got it. I got the understanding of the debits and credits. I got what the business was trying to do and I loved it. And I carried on since then. So I've been fortunate enough to work. I think it would be fair to describe it as eclectic, a bit my career. So I've been fortunate enough to work in retail, in energy, in telecommunications, at a high-end casino in Mayfair. And yes, and now I work with a practice that looks after smaller companies, mainly startups, mainly tech, although there are a few of our clients are not, and some with making biomedical advances, trying to change the world. So generally, I would say right now, my eclectic history is being reflected in my eclectic role, and I'm enjoying it.
Absolutely, clearly, that's amazing. And I was going to say, I think it's a rite of passage into accountancy if you understand debits and credits, right? That weeds most people out. Like, I don't know why it's so difficult,
but so many people say it's about maths, and I say no, it's about the business. The numbers are just a way of translating what's going on, but it's actually about what the business is doing, what the business is trying to do, how it translates its thinking into activities, into something else in the future, what it means when a collection of people get together. So it's never just numbers. And anybody who thinks accountancy stops there are sort of missing the point of it, as well as not to mention the interaction with the legal world and with politics and business and society as things are changing, that need to be aware of all of those things. It's a lot of fun. It's a lot of fun.
Yeah, very well said. I couldn't have said it better myself. Now, we've come up with some brilliant topics for today, a jam-packed session. So those 3 main topics today are: your investment strategy is as important as your business strategy. Looking forward to that. Number 2, what it really means to run a company. It's not all about champagne and unicorns, turns out. And number 3, a word of caution: silly mistakes that may cost you your company. So without further ado, your investment strategy is as important as your business strategy. Now, AMG, you stress the importance of keeping your cap table clean, both in terms of employees and investors. Do go on.
Yeah, so most people don't think about that. When you're a founder and you start off, you just want to get money in the business and you want to get going, and that's completely understandable. You'd have thought about what you want your business to do, but you won't have thought about what you want your investment or investors to do. So very often you get people, they start off with a few people that they know, then they go out to a number of angels, then maybe they go out to a few more, and then they keep doing a cycle, and their cap table gets bigger and bigger and bigger and bigger. And as soon as they've made the business to the point where maybe you can get a VC involved, they suddenly find themselves with a cap table that's unwieldy, that's messy, that nobody really knows what's going on. The VCs don't like it. They might like the business, but the work required to fix the cap table might be too much. There'll be odds and sods sitting on there. You know, when you were early in a founder and you thought you had your IT person and you were getting going, and then you have a massive falling out and they've walked away with 10% of your company and they're not giving it back, no matter what, mainly to spite you, but secondly, because they're always hoping they're going to make some money. But it just leaves the mess behind you. So when you're thinking about the business, try and think about your investment and what you want it to look like and who you want on there and why. It's not, it makes sense in the first instance to go out to friends that you have, but really, let's face it, most of us, our friends are not that sophisticated, they're not sophisticated investors. And if they've got £5 to give you, it might be their life savings. And there's always a risk that the business goes wrong. So that may not be fair to bring them in just then. Maybe if you think it a bit down the later, maybe, but not then. Think about the people who can also bring you, not as well as money, but can bring you ideas and thinking and different way to look at things. Maybe somebody's had some experience in your business and they've got some contacts. Think about what it looks like in terms of, well, you start off with these investors and maybe there's just 3 or 4 of them to start off with, because it gives you a chance to prove your idea, and then you get a few more involved and a few more. So you never have too many, because I know some people say we're going to crowdfund, and crowdfund is brilliant. But basically, when you're crowdfunding, you're potentially bringing on 200-300 people, some of whom may have only put a £5 and a £10 in, but they feel that they have the same rights to tell you how to run your business as somebody who maybe put 50,000 in. And you've got to look after your investors. You can't look after, well, 100 and 150 people, or maybe even 30 to 40, not really well. So just think about it. And just having that idea in your mind might stop you early on from just going to everybody and just, again, try to be a little bit strategic. Now, that's really easy for me to say because I've seen the mess at the end, but just try to look at the beginning and think, how do I keep this clean? How do I keep it to the smallest number I can, but the best smallest number I can? And that's what I would say. So not saying don't get the money, but I am saying just think about what it might look like. And even just thinking about it will help you make a better decision, because you're not just diving in. So that's what I would say. Yeah, give away your company carefully. Like, you can have share options for staff and stuff like that. Think about what happens if it goes wrong, because you may stay best friends forever, and that's absolutely brilliant. But if you don't, you've got to allow for an exit. And that's not being cynical. It's just accepting that sometimes even the best people in the world don't always get on. And when it comes to your business and what that might look like in the future, just to have that in mind.
Yeah, absolutely. And especially on the vesting schedules, have a cliff and then a vesting period. Don't start vesting from day one, because you're not sure. It's an early relationship. So much in there. Thanks for sharing that. The other thing I want to move on to now is raising venture capital. It takes startups into this, on this hockey stick journey, but there's a negative bit in that hockey stick, the cash burn territory, where you go into negative profitability. Now, that means you're reliant on follow-on capital from your existing investors. Now, tell us a bit more about how that plays out and what advice you have for entrepreneurs who are embarking on this journey.
Okay, so that's related to, again, planning your business, planning what the future may look like, and also understanding what the investment journey looks like. So when your early stage investors put in, your sophisticated investors will recognize that they will need to put in again at some point, or somebody will need to. And the reason they've come in early is because as you grow the business, you grow its value. And as we all know, the cheaper you get it now, the better return you get. So when you're thinking about your business and how it grows, in your own head, put times into it. So you may start off with saying, well, actually, I've got this really good idea. I just want to see if I can build it. And then once I've built it, I want to see if the market likes it. And then I want to see if I need to change it in some way. And each of those may be points in your journey at which you need to raise more cash for the next stage. And if you start off having that in your mind, that you probably will be unprofitable, you probably will need somebody just to cover that period, then you'll be in a better position to look at those positions when you need to have follow-on funding. It shouldn't come as a surprise. That's what I'm trying to say. Don't let it should never creep up on you, because you should know, okay, proving, and this is where you mix the financial with the non-financial, proving your idea is an important point, because once you prove it works, then you can get more people in to show, well, it's not, I've got it working on a really small scale, I want it to work bigger, but we need to test the working bigger because I know things will be different. and then you can get your funders in there for that. And then it will be, okay, listen up, we found it works okay in our local market, but hey, I want to get it out there internationally, and you need somebody to step in with you at that stage. So you need to keep in your mind, you need to always have in your mind what the future looks like. And that is a future not just on the various stages when you need to raise more funds, but also on what does the exit look like. You can have situations where people keep saying, well, we need to keep raising money. And the question I'm asking is, well, why? What are you going to do with it? You only take money from people because you're going to do something with it. And what most people don't understand is every time you take money from somebody, they're not giving it to you for free. They want something back. You're giving away more of your company. So again, you need to just, again, have that thought in your mind. And as you're planning your business, what that looks like. Yeah. And what it looks like for getting invested, and when the cash will come in and how much and what's sensible. And you never fundraise for your minimum. You always want to fundraise for whatever the amount you need is, plus maybe 10, 20, and if you can, 25%. Yeah. And again, when you step out there to get that cash back in through the door, you want to come back with people who's going to support you and be there for you.
Absolutely. And I think we see two ends of the spectrum there. We see people saying, I'm going to raise 500K and then we're going to become a unicorn, and there's those serial raisers who keep on raising and just dilute themselves to smithereens. But look, super wise words there. And I think key to planning all that is, of course, financial models, which you know a thing or two about. What does a good model look like, and when should you not pay an advisor for a model they've built for you?
Okay, so at its core, your financial model should have three statements, really clear three statements. There's your profit and loss or income statement. There's your balance sheet, which is your statement of assets and liabilities. And then there's your cash flow, which is basically taking the cash line out of your balance sheet and giving you more details about it. These are all important because they're the basis of accountancy. They're the basis of all the metrics and KPIs and ratios that people use. They're all in those numbers. And if a model doesn't have that, then, well, you're not providing your investors with what they need. But not only that, you're not showing yourself to be sophisticated in your thinking, because you don't know. If you don't know it needs that, you're not going to ask somebody to give you that. It needs to have those things. And it does, having a model does three things for you. I said originally two, but I think it's three. The first one is it presents your ideas in a format that a sophisticated or knowledgeable investor gets and understands. They don't need to dig deep. They don't need to answer you any questions. You might even present with it a little summary sheet that just gives the high-level numbers. Secondly, it helps you to plan your thinking for your business. I was saying earlier about, well, what are your stages? When do you expect to run out of cash as you're doing? So you can tie that, you can actually see what it looks like in terms of the numbers. And then the third thing that it gives to you is that it should help you refine your thinking. And that sounds really strange because, well, I've got my business, I know what it does, but when you have your business in your head and then you put it on paper and you bring in the relationships that will come with raising or making that sale or making that product, it then looks differently, and you end up asking questions that you never expected to ask. You never thought of it because it's not been presented in that way. So that's what a good model will do for you. And it isn't too detailed. Very often when I'm working with people in their models, it's like they're trying to recreate what the business might look like. But you don't have to do that. You should be at least a step away from it, because when you're running the business, there's lots of things that go on. You don't try to model that. Let's say you may eventually be able to sell to 10 different types of businesses, but actually in reality, there's only 2 different income streams. There's your professional and your non-professionals. Then you focus on those 2 income streams. You don't need to go too deep at the planning stage. It doesn't help you do anything, and it makes your model too complicated. And it means that you don't understand what's going on. You're going down to the weeds. You're not stepping back and looking at the whole picture, looking at the whole relationship. So that's what I say. The other part of your question is, when do you not pay an advisor for it? My first flag would be, ask them to give you an example, anonymized, of a plan they built for somebody else, or the summary reports from that. And if you cannot for yourself, even as a non-financial person, tell the story of that company, then you don't want to use them because they're too complicated. you know, you should be able to look at it and see, oh yes, the company's growing here, and oh yeah, it does that by investing in these people here. You should be able to do that. And if you can't do that from what they presented you, then it's not worth money. One of my pet peeves, don't take a model that has macros in it. Macros is programming. I don't see why you have to program a 3-statement model. It's not, the person who made it might be being very clever, but you're the person who's going to be using it. So that's what I would say. So I would say it's those things. Ask for an example, make sure it doesn't have any macros. When you get it, see if you can understand your own story. And that's when you should pay out the money and feel confident that you're getting something good.
Excellent advice.
Yeah,
that's
what I would say.
And not only are you going to use it, you're going to, your investors are going to ask for the model. If it comes over with macros and some link breaks and everything, you're just, scuppering your chance of being considered at the top of the pile. You might just, never get to see the light of day.
No, and it doesn't need to be too complicated. Your investors aren't looking for complicated models. They want to understand where you think your business can go. So let's say traditionally you present them with 5 years. It doesn't mean in reality this is what the 5 years your business is going to do. What they want to understand is your business's journey. What makes it grow? What makes it tick? Where does it go? Does it stay international? How do people buy your product? Do you need to speak to them on the phone? Is it something they can just take off the internet? Does it need a massive amount of marketing spend to support it? Those are the things they want to understand. That's always the thing we didn't speak about, isn't it? What need you're answering? What are you trying to help people to do? What are you solving? And your business plan should show all of that.
Yeah. And the one other point I want to dwell on is you said it helps you understand and refine your thinking. A lot of people say, I'm not going to build a financial model. It's wrong. It's a startup. What's the point? And the point being, I always say to them, like in private equity, you also build financial models and you forecast 5-10 years in advance for stable businesses, not high growth tech businesses, and they're always wrong. And
yes.
usually lower revenue and everything, the returns aren't as sexy. Sometimes it's better, but and I say, so if they're getting it wrong, don't worry about whether you're getting it wrong or not. The whole point being that you're going to understand the unit economics and what makes the business tick and where you make your margin and what levers of profitability you can pull to enhance that. And so it's such a valuable exercise. You need to embrace, if you don't have the skills in-house, embrace your CFO, say, you build it, but talk me through it. I want to own it. And the CEO must own the model, even though the CFO builds it. And of course, there's a lot of ownership, but it's your business. It's a reflection of your business.
Yes, absolutely. It's almost like business doesn't just happen. And if you've never worked in a business or you've never been the lead of running a business, you don't recognize all the different things that feed into it. And your business model helps you do that. But it only gives you the numbers, which is why when you say you've got to own it, you've got to think wider. You've got to think, what do all these things mean? And you never, like you said, as soon as you build it, it's wrong because the reality always changes. But how can you know if that reality is good or bad for you if you haven't given yourself an idea of what good might look like? It might be better than you expected because, your marketing is actually really effective, or it might be worse than you expected because your pricing doesn't work for that market or people aren't using it exactly the way you think they should. But if you don't have a baseline that you can measure against, how are you going to know? You're just out there. You could be the equivalent of running out there in a cane circle, it's so high above your head and you don't know where you're going. You're just running around in circles around inside it. But because you haven't laid out a path for you, you're not going to know where you're supposed to come back to, where you're supposed to be going. That's the importance of your business model. And that's why people use them. And that's why people ask for them.
I hope the listeners are as passionate as we clearly are about this topic. Now, going to question bank 2 on another dull topic. I'm not sure if the first one was dull, wasn't for me, but talking about running a business, and you said, be ready for the bank to kill you. I wrote that down last week. Now, it sounds like a nightmare. What do you mean by that?
It's the banks are the bane of my life. Their admin and their questions and their inflexibility and the fact that they don't train their staff well. And okay, I know it's because it's around money, and I know they've got to be regulated and they've got to do this, but they are the most painful thing in the world to deal with over and over and over again. And I it's the one part of my job that I do not enjoy, working with the banks. You know, the big banks, well, they don't really, you know, they play a good game. You see, they have really good adverts, and there's all those people they're scurrying in, and there's always a really wonderful person to look after you when you step through the door on the advert. The reality is your regional manager has got 1,000 people and doesn't know you from Jack Adam. Your nearest branch is full of people who they don't train properly. Banks just banks. All I would say when it comes to that, there's not much we can do. You can use the challenger banks, and don't get me wrong, they make it easier to start a bank account. But as soon as you want anything a bit more, you're going to get mired down. So I suppose all I'm saying is be prepared, and try and find your Zen place before you start dealing with your banks, because without it, you will end up pulling your hair out. And then they can't do this and they can't do that. And you call out somebody and then they tell you, well, have you done that? And I said, well, if I hadn't done that, I wouldn't be calling you. Oh, well, you need to do that. Can you help me with the next step? I don't know. I need to ask my manager. It's just, it's painful. So
I love that. Oh, great. Okay. Now, another one on that note, company's house, boards, taxes. What's it really like running the rest of the business?
There is a lot of admin, and you need to be prepared for it, and you need to acknowledge your strengths and weaknesses in relationship to it. If you ignore your admin, you can turn around one day and the tax man's knocking on your door for his VAT money. I have had that experience. He was big and burly, so that's all I can say. Fortunately, yeah. So fortunately, we had paid our taxes and they hadn't been getting the information right at their end. But I was so shocked. I really was shocked when this bloke turned up looking for the money. So it can and does happen. There is a lot of admin. Be prepared, try and be organized. Know what your strengths are. If you know admin is not your strength, then when you're looking for your next hire, make sure that person's got the skill and don't ignore it. It may seem like, oh, I can come back to that later, but it so often trips you up. If there are any startup tips I would have for a founder, when you first set up the email for your company, you always have one in your name inevitably. Actually, start one up that's called info at or accounts at, or something like that. And the reason why, as you grow and more people come in, more specialists comes into your business with their skills, they'll be able to go to that one email and find what they need from all those accounts you started way back in the day, all those invoices that came in with full little bit, all those passwords or change of passwords and that's it. And also use something like LastPass. And I think we should do the legal thing where similar software does exist, but something which holds they do, don't they? Those adverts, you see them. All those things that can hold it in one central place. Try to do that, especially in an electronic world where it's easy to lose things. If you can always have it in one place, that will save you. Because, you know, you'll register at company's house, you'll register your VAT, you'll do your startup things, and then you'll run off and start running your business in terms of, you know, building it or speaking to your designers or your developers or whatever. And then years later, you suddenly need to do your filing at company's house because his email has popped up and you don't know where if it's on the same email, you'll find it. She says with 97% surety.
Yeah. And I'm sure that would solve a lot of your problems. If
it
all
will solve a lot of
did
problems.
That, right? Yours though, because you usually inherit the mess.
Exactly. Normally we have to go and find that for people. And I would also say is you are going to have sleepless nights of your businesses. It is true. It will consume you. Try to be aware of that, and every now and again try and set some time aside for yourself and for your family, because you'll be amazed how sometimes, even when you're under so much of that pressure, the fact that you took a day out and did something that was nothing to do with your business and you really enjoyed it and you spent some time laughing and joking or whatever it is with other people means you just come back in refreshed. And we've seen those things about mental health and stress and all those other things that pile on, and they will pile on. Be ready for them. Carve out a little bit of space for yourself. They often say founders don't go on holiday, and it's absolutely true. You don't. But even if you do manage to get away for a little while, switch off your phone. Even if you're just there for an hour in the morning, an hour in the evening, have that time in between. It's hard not to bring your laptop with you. And hey, let's face it, we all watch something on TV or on our laptops when we go away, but just try to be aware of that. But it is a lot. It will be a lot of strain for you. Try to keep the journey, and also know who you are in terms of know what your strengths. There are some founders, I see them trying to do everything. Do you know what? You're not good at that. Just admit it. You're not good at it. It's okay. It doesn't mean you're not good at running your business. It just means that that is not your forte. You know, as an accountant, you can drop anything on my lap that's numbers made or about the account systems or Excel or even legal stuff. I'm really good on that. Ask me to do a PowerPoint from scratch. I'll struggle. And I very often get around that by putting in information and handing it over to the person who can make it look better than I do and make it flow a bit better than I do. That's not to say my ideas aren't good. I've just acknowledged that's not my strength. Give that to people, you know, and especially nowadays where there are so many startups who themselves are trying to ease somebody else's pain. You know, have a good relationship with a few of those. So, you know, have your HR, for example, who you can go to, because HR law can trip you up without you even realizing it. Yes, have your financial support. Have very, very, very cautiously, have some sort of legal support. I don't know, maybe I'll take back on the legal support because they're always quite expensive. But I'm just trying to say, know what your strengths are, know when you need to reach out.
Yeah, absolutely. And also you mentioned that in terms of your hiring strategy, that you just need that oversight. You can't be everything. There's probably at least 100 different wheels that need to be spun up, and you just need to be able to be the conductor as opposed to the wheel spinner.
Yeah, I mean, some of the weakest founders that I've come across are the ones who try to do everything. Surprisingly enough, people think that's a sign of strength, but it's not. A sign of strength as a founder is to have a good vision, but to acknowledge that sometimes as the person who has the vision, you don't have the other skills that go with it. Some of my best founders are brilliant. Their ideas are fantastic. You know, they can sell it to investors, they can sell the dream, but they're bloody awful when it comes to perhaps looking after their team well, because they don't understand those niceties. They don't understand why everybody's not just tearing up the world to turn, you know, to produce their idea. And that's when you want to say, well, actually, I know that someone else can do that better than me.
Yeah.
I can be the inspiration. I can give you the dream. I can sit down and spend time with you. And as I say, my best founders, from that point of view, they're really lovely people, but there's just some things they don't do so well. And you need to acknowledge it in yourself. What am I not good at? And let it go. Give it to people who can help you to be your best as well.
No, absolutely wise words. I was reminiscing about a boss who was staring failure in the face, and I don't think there was any way to avert it. And he sent this very passionate email, and at the end it said, "I hope I can count on you to set this world alight." We were like, "Yeah, it's going to go down in flames." But very passionate. It's like, I wish you hadn't sabotaged us for the past 12 months. But anyway,
this is it. This is it. That's the thing. I think sometimes as a founder, you don't realize you're doing that. You think you're helping, but actually you're just getting in the way. And it's a skill. It's a skill as you get. I suppose it's a mixture of things. I say it's a skill. It's also about being willing and able to let go, because I understand this is your dream, and most people find that really difficult to do. So we've all said that our worst founders are the ones who keep getting involved in everything. Trust the people that you work with. You brought them in for a reason. I don't know, I wonder if I'm being unfair, because it seems like it's so many skills you're asking to have as a founder. At the same time, you don't have so many of those skills.
No, I think I think that's the reality, and you have to be that jack of all trades. However, you don't do those things particularly well, and I think it's a recurring theme on the show. people say, let go, let go, let go. And it's not a logical thing. It's a very emotional thing. And if you know, it's not a skills thing is what I'm saying. It's like, it's my baby, and I'm okay not being a micromanager now. I'm going to hire better and brighter people than me, and then, do what I'm good at, outsource myself, and just be that figurehead, be that cheerleader, be that oversight. But yeah, it is a tricky balance, but still letting go is the first bit to achieving that balance, I think.
It's doable. It's doable. And I suppose even in those situations, maybe it's worth having a mentor as a founder.
Yes,
I mean, we talked about your investors coming in. If you have a good relationship, perhaps with one of the angels or one of the VCs that you brought in, they can either be that for you or provide you where you can go to find that. Because it is a skill as well, isn't it? It is a skill, leading a business and leading a business well. Not everybody's born with it, but it can be developed.
Yeah, and often people say, well, I do, I do the financials or whatever they do in the business, and you're like, no, you're the CEO, and they're like, okay, well, if I get someone to do that, what is my job? And you're like, CEO, and they're like, well, what's that? A bit scared, and you're like, nah, that's a good thing.
Yeah.
So yeah.
Because you manage so many of the relationships. You're out there talking to people internally and outside and external to your business. You're keeping your internal team, their vision, their culture, the kind of people you want and need them to be to move the business forward. At the same time, you're the protector. You're the one who's out the front when other people are trying to pile on in and maybe find fault with you. You hold that line. But you're also the person who then goes out to investors, or you meet key customers and you meet key suppliers. So I once heard somebody describe the CEO as a chief emotional officer, because you're managing so many emotions inside and outside the business. But that's what you do. You provide the vision and you provide the future, and you can see what the future looks like, and you're drawing everybody to help you to get there.
Yeah, no, amazing. Okay, great. I think we must move on. So let's go on to question bank 3. So silly mistakes that may cost you your business. So let's talk about hiring strategies. Now, you've got a really good analogy on this one. Can you share?
Yeah, I have found that after going through the people spec and going through this discussion that people have about their new hire, that the only person who will do everything that they want is Jesus in a skirt. Now, I say that because Jesus in a skirt, that ticks all the diversity levers, first of all. We know that Jesus had this wonderful way of doing things. He could touch things and change things, but it is almost like they want God on earth. They don't just want good people, and I find it so frustrating. They'll go for a CV and well, they don't have that and they don't have that. Well, think about it. If the person who has all the skills you want came to you, what else are you offering them? Nothing. So why would they come? But if you have somebody who has 3/4 of the skills, or what you need comes to the base, and what you're basically saying to them is, you've got enough, but hey, we're going somewhere wonderful, and you can come with us and you can learn with us and you can gain these skills and it can be fun. So that person says, actually, there's a reason for me going over there, but there's no point me going over there if I'm just going to be doing what I'm doing over here. And let's face it, most of us can't offer a 20,000 premium just to poach. That's it, to poach. Poaching someone. We don't have that. So yes, have your job spec, but when you go out there, also I find that people don't think laterally as well. They think in the same way. There's never, okay, so one of my best experiences when I was hiring somebody, I met somebody who hadn't done particularly brilliant at school. But I don't know if it was via a work placement or whatever it is, she came out of school and she found accountancy and she got it. So I could see in someone who'd taken a completely different path to me, I could see how much they loved and understood it. I'd have taken her in a heartbeat, because that person would wanted to learn. All that schooling had ever given her was probably, this is boring and I hate it. For the first time, she found something she wanted to learn. So from that wanting to learn the accountant, she's going to want to learn everything. She's going to want to understand in the business. That's someone you can really work with, because you're getting somebody who's got those core skills and that core passion, and then they can expand with that. But instead, you're going to go and look at someone who didn't have the great schooling over there. Oh, but that person, they got the A levels and the O levels, and basically they might be just a bit boring. And they might not have the same passion. Well, they may do.
Yeah.
they made it, or and they may not have the same passion. I mean, I know not every job and every role requires the passionate person, and I suppose this is coming from me, who's worked in smaller businesses, where I know that that passion is part of the fun of working in a small business, getting things done, that emotional tie-in. So I just wish when people were hiring, they'd stop looking for God on earth and just look for good people.
Yeah.
You know, because as much as who will do the job, and may even exceed your expectations.
And will be loyal. And, you know, that we say, hire for attitude, train for skill. It's not that difficult running a business. It's really, you want someone who's, you know, passionate, nice to work with, keen to learn, and goes the extra mile, you know, and a modicum of intelligence, right? And then if they do leave, for me, and I've heard people say, I don't want to get someone and train them up because they leave. Well, for me, I look at it and say, well, I had that person, they came and worked with me, we worked so brilliantly together, I gave them so much of myself, they developed who they are, and look, that, you know, literally I'm feeling that's my baby. Do you know what I mean? When you go back into the work, that's my baby. So there's nothing wrong with feeling that as well. And because we all change and grow, and we all need something. When you started in the founder, there were some things you started with which you weren't able to do, and you've got really, really good at them. Again, I'm not saying you don't want to employ people who don't have any skills, but just try and walk a bit more of a realistic ground. That's what I'm saying. There we go. And sticking on that theme, you talk about diverse teams, and your take on this is, again, fabulous. So do tell.
Well, as I said to you before, you can have a team of people who have got different ethnicities, so African, Asian, European, but they all went to Eton, they all talk the same, they all think the same, they all like the same champagne. That's not a diverse group, because their thinking is the same. It's not enough with diversity to say, I'm going to get somebody who looks like this and you've ticked a box. That is not diversity. That is just box ticking. If you want diversity, there's two things you need. What you should be looking at is diversity of thinking. And that's what often comes through with ethnic diversity or sexuality diversity, because you've got people who are used to looking at the world through a different prism. So they bring different ideas and thinking, and that's what makes a fun business, a group discussion, really good, because you'll know that there's one of your thinkers who comes through and is really meticulous, and they'll always pick up the law thing. So that's okay. You don't need to worry about that. That person will be able to bring that and learn from you. But then you have someone in the world who say, but did you think of this? Because they're used to seeing the world that way or through that prism, and they can bring it to the table as well. And if you're truly, truly interested in diversity, you bring in people who are different, but who have the same goals as you, so that you can bring all the ideas in there and go forward. And there is no point in bringing on somebody who's diverse if you're not going to listen to them. You might don't bother. At least be honest about that. If you're not really willing to learn, at least be honest about it. But if you are willing to learn, if you really want to make a difference, look out there. I remember going at a segue years and years ago. One of my best work experiences where we brought in a group of young people who had fallen out of the school system, and they were now working with a charity, and the charity wanted to help them get into the workplace. And they felt that one of the best ways to do this was to work with businesses. And we had an open day for them. Absolutely fabulous. We planned all these sessions. And part of doing that was we talked about how we would dress, the importance of it. And I pointed out that it was important that we had a casual business address, because very often when I look, for example, at my parents, they didn't work in offices. My mum was a nurse and my dad's an electrician, so they never had that office look. But just showing what that office look could look like if it's not being imposing on you, not feeling threatening on you, but to give them that. So yeah, this is a look. There was one session we did, and we had sessions of half an hour, and we were speaking to the young people about what their careers could look like, what they could go into the future, what their dreams were. I don't think anybody ever asked them what their dreams were. Oh. Yeah, I know. There was a young woman sitting in the corner, and you can imagine the type, very sophisticated but quiet, a bit aloof, didn't want to get involved. This was a bit beneath her. But when we started talking about dreams, for me, the best moment of that entire day is when she said, do you know what? I'd like to be a journalist. She hadn't engaged all day. Now, us trying to bring it back to diversity. If you're not prepared to look, you won't get a different mindset. This is a young woman who wanted to be a journalist, who had, for whatever reason, fallen out of the conventional school way, the school, you know, the school path of making your way in the world. She found a different, she wasn't on that path. And yet when you talk to her about her dreams, she could be. And I just think just need to bring those things on board.
That's a heartwarming, incredible story. That's amazing.
Best day at work that was for me.
Very cool. Very cool. I love that. Now, we're going to go back to a dry topic of cash management, but something we're very passionate about, so that's okay. Now, your advice here is to be pound wise and not penny wise. Can you explain what you mean and what you've seen as well?
Well, I suppose the song that's just going through my head at the moment is Money's Too Tight to mention. Money will get tight, but it's got to work for you. There is no point saving money if what you are spending on isn't working for you. It's not going to move you forward. All you're doing is holding on to the money in the bank, and that's going to dribble out on you, and you're not going to get anything for it. So it's all very well saying they're expensive, I'm not going to use them. But if they could actually move you forward, then what are you losing? Whereas you could save your money and try to do it yourself. Well, we've talked about the weaknesses of that already. Or you could save the money and get someone in who's really cheap. Well, when you go out there and do a bit of a benchmarking, why are they so cheap? There's a reason for that. Good stuff you pay for. It doesn't need to be madly expensive, but you will pay for it, but it will be worth it. I had an experience with one founder who kept changing every single one of their suppliers because they could always find somebody that was cheaper, but they were kind of missing the point. They were not going to save their business by saving money. They needed to grow their business, which means they needed to invest. They needed to get something they could get a return out of it to go forward. And that's just something to remember. If you keep that seed, stuck in the corner, it's not going to grow. You do need to put it in some earth. You do need to spend.
Yeah.
Same time, be sensible with your money, but don't be too cheap. Being a tight wad never helped anybody. So that's I think the worst example I could see. And then the other side of it is don't be profligate. Just because the investors are giving you a decent wad, it will run out. It's for a purpose. So look after it and be wise with it. That's what I'd say.
Yeah, absolutely. There's a phenomenon I've seen before where you've got most businesses go through a sawtooth cash model. They raise investment and they spend it and it slowly trickles down. And what they do is they raise investment, they start spending on marketing, start getting growth, and then it doesn't come as quickly because, marketing takes about 3 months to spool up before you start seeing results. Then they say, oh, the cash is running thin, and then they stop spending on marketing, where the cash just dribbles down, runs out. Then they go cap in hand to the investors. No, we need more money. What's the growth like? Well, not good, but we had to stop spending on marketing because cash was running out. And they literally keep on doing this.
Yeah.
You're never going to grow. You have to stand for something. You have to put a stake in the ground and drive towards X customers. And as you said earlier, quite rightly, hit that value inflection point of 100, 1,000 customers. And then you can go back to the investors then and raise a bigger check and then rinse and repeat.
Exactly. You've got to give investors something to work with. At the end of the day, yes, they want to be sensible with their money. They need to get their returns as well, but you've got to give them something to work with. It's like you were saying, if you've got the money, you just keep getting cheaper and cheaper and cheaper. You're not going to get there. You're just not going to get there. Not in this journey. In a more conventional business, maybe you will. You just ride out the hard times. But when you're a conventional business, you have much more avenues open to, well, I say that. Technically, you have more avenues open to you to support your business. But when you're a startup, it is a different mindset, and you've got to be ready for that. You've got to be able to go forward with that. So, yeah.
Amazing. Great. I'm going to bring it to a close with a rather chunky summary. So here goes.
Okay.
So, back to question 1. Your investment strategy is as important as your business strategy. Now, AMG said, keep your cap table clean, both in terms of employees and your investors. Target that ideal cap table and work backwards, not the other way around. In terms of follow-on funding, it's a reality. Expect it, plan for it, and also try and link it to the value inflection points in your business, as opposed to just needing funding like halfway across the river. Fundraise, raise 25% more than you think you need, and you probably need more than you think, so consider that. A good financial model, and help me out AMG, it helps you plan, refine your thinking, and there was a third one.
It shouldn't go too much into the weeds.
There we go. Love that. Absolutely.
Yeah.
And of course, keep it very simple. It's all about telling the story of your business, and don't put in macros, for God's sake. Right.
Yeah,
now,
no, please don't.
And then importantly as well, own your financial model. As the CEO, own it. It's your business. It's a reflection of that. Don't just put it in the bottom drawer and run your business like a cowboy. Now, in terms of what it really means to run a company, be prepared for banks and find your Zen place, AMG said, before you start, because it's going to be a trying period. Remember, there is lots of admin involved. So understand your strengths and weaknesses. And if admin is not one, find someone who loves it, who loves being organized, and they'll be in your element and leave you be. And then your basic operational things like setting an accounts at email address, a password manager, make it easy. Think about the future growth. It's not just going to be, AMG at Gmail forever. Plan for the future. Now, in terms of actually running your business, you will have sleepless nights. So I think make sure you take time out. There's lots of talk about mental health, but people are very good at giving advice and not taking it themselves, especially entrepreneurs. And they only often reflect at the end of their hard journey. Don't do that. Take time out during the journey. You'll be more invigorated and keep the passion. And after all, you're doing it for love of startups and to do something really cool. Don't burn yourself out.
Absolutely.
Thank you. And then hire for your weaknesses as well. Don't do stuff that saps your energy. I heard something the other day. They said, it's not that you're running out of time or whatever. You're just not, you're tired because you're sapping your energy. Do things that bring you energy and stop doing the energy drains. And then it's not a time issue. It's an energy management issue. So if you hire for those weaknesses, you'll probably retain more energy yourself. And on that as well, trusted suppliers as well. And of course, let go. Once you get good people, trust them, let them run with it. And that's often an emotional decision.
Yes, absolutely.
Get a mentor. And usually that should be an ex-entrepreneur as opposed to anyone else. And then, of course, number 3, silly mistakes that will cost you your business. When hiring, stop trying to hire for Jesus in a skirt. Hire for attitude and passion. And then number 2, AMG said, diversity is not about ethnic origin. It's about diversity of thinking, and they could be from various different backgrounds. And also when you hire that person, make sure you listen to them, for God's sake. And number 3, don't be too cheap. There you go. Invest in your business, but respect the cash. So anyway, anything else you'd like to add to that, AMG?
Try and enjoy the journey. It can be fun.
Beautiful, beautiful. Excellent podcast, excellent session. Such wise words, and what a way to end it. So thanks again for sharing this journey with me. And where can we find you online if we want to hear more about you and Practical CFO services?
Yeah, so you can find me on LinkedIn. Yes, I'm known by my initials, which are AMG, but that's short for Angela Marie Graham. So you can find me on LinkedIn. You can also find Practical CFO on LinkedIn as Practical CFO, and we have a website. So look forward to hearing from you if you want some, some more help.
There we go. Highly recommend that. Great. Well, thanks again, and we will speak soon.
Okay. Thank you, Alex. Take care.
That's all for this episode. Keep tuning in for more exclusive insights from seasoned investors, accomplished entrepreneurs, and professional service advisors. Follow the Tippy Top blog on all major social media platforms, including Twitter, TikTok, Insta, Facebook, or now Meta, LinkedIn, and of course, you can find me, Alexander Lee, on LinkedIn, and you can also check out my website, thetippytop.com. Until next time, keep pushing, and I'll see you at the Tippy Top.